Welcome to this week's edition of the 6-5. I'm Patrick Moorhead with Moor Insights Strategy, and I am joined by my awesome co-host, Daniel Newman with Futurum Research. The 6-5 represents 6 handpicked topics that we talk about for 5 minutes. We're all analysis, no news. You can get the news somewhere else. Daniel, how are you, my friend?
I'm doing good. And everybody that's watching on video and not listening on our podcast, and I know we have a lot of people doing both. You see me in this awesome jersey. We used to talk about our travels, but we don't talk about our travels anymore because we don't go anywhere. Although I will be in Austin next week to see you, Patrick, and that'll be a nice change of pace for me. But yeah, I'm wearing the Arsenal jersey today. Right over my heart is the badge because the Community Shield's this weekend. And for all of you soccer football fans, that's when the winner of the FA Cup in England plays the winner of the Premier League. So Arsenal is playing Liverpool. So anyways, I don't normally dress this nice for our show, but just for everyone out there, this is not a sports show. This is a high-tech analysis show. This is the 6-5, and this is, by the way, the best analysis, we believe. And I'm doing great. And by the way, we're recording. It's a Friday afternoon, and we always have great conversations, Patrick, on Friday afternoon because we're just fired up. I mean, after a week of talking to customers, covering, analyzing, and watching the tech industry, opining, pontificating, it's like great Friday night. It's like good dinner, time to sit back, chill, eat a burger on the grill, throw back a cold one, whatever your choice of a cold one is.
Yeah, I love it. Yeah, Daniel, at the end of the week, I'm kind of crispy and I'm still fired up though. I mean, I started my day with Beastie Boys and I think I had 12 meetings today, and this is what I've been looking forward to all day. But just a reminder, this show is for information purposes only. We are going to talk about earnings on this show and publicly traded companies. But please do not take this as investment advice. Talk to your broker, talk to somebody else, not for us. So let's dive right in, Daniel. So first off, we have a bunch of earnings. So let's kick it off with Dell Technologies. People were wondering what would happen with the pandemic here with Dell Tech. And they did really, really well. In fact, they exceeded expectations all across the board. Big strength in government and education, as you would expect during COVID. And Dell is actually very highly indexed in GovEd. So not a big surprise. Dell didn't drive increased revenue. In fact, they were off overall. Clients were down 5%, data center were down 5%, but there were still a bunch of highlights, and I just wanted to hit a few of those. Their arch rival, HPE, that we're going to be talking about a little later, always talks about X as a service, and Dell was like, hey, by the way, we do $6 billion in services at 15% growth. And I thought that was big. I was also glad to see that Dell cranking out a 25% increase in high-end PCs. This is Alienware and XPS. And if you haven't used one, you should give it a shot. I just brought out a review of the Dell XPS 17, and it is awesome. Some final thoughts on data center. Again, revenue is down, but I always like to see that growth areas that aren't bleeding edge, but leading edge markets and growing markets are growing at double digit. And we saw triple digit growth of VxRail appliances, triple digit in PowerMax, that's the high end storage, double digit in data protection, and maintain number one share in about 7 categories out there. And finally, VMware, double-digit overall growth, really the software and services play for most of Dell, and they had a 44% increase in subscriptions and SaaS. So overall executing well, beating expectations. Sure, the market doesn't look at them as a sales force and expect 25% annual revenue a quarter. a real solid showing.
Yeah, Salesforce, speaking of, it's ridiculous $50 a share increase this week suggests to me just how nuts this market is. But the OEMs like Dell, Cisco, HPE, which have now all reported their most recent quarter, they're really bellwethers to me. They're bellwethers because they tend to have a pretty broad mix of products and services. They have a broadening delivery systems of services, traditional and managed, consumption-based and capital expenditures. They have big iron and expensive. And in the case of like a Dell, they even add in that flavor of having PC. So Dell is really well diversified. The revenue was good, it came in where it needed to come in. You got to remember all these numbers are tuned down. They're all tuned down because of COVID. So they beat what was expected, but year over year, all the big OEMs have seen a little bit of a pullback. My take on it is they all kept it within, or Dell kept it all within a single digit percentage. And for me, given the circumstances, you think about starting with the pressures of China, then adding in COVID and the pandemic, to be within a few percentage points on overall revenue from the year before, really solid. The place I expect growth from them really is in PCs and flex consumption-based services. And in both areas, you mentioned the $6 billion, but also on their Dell Tech as a Service came in at about $1.3 billion, up from $900 million 2 quarters ago. So a big move there. And I still think that product's in a very early phase, or the services, they're very early. The actual interface and accessibility still hasn't hit a maturity level where I think it can scale. I see that being a multi-billion-dollar offering for the company in the near future. The consumer PC business was super solid. That kind of rotated from commercial client last quarter. I'm still worried about the big business, the storage in the compute and server business. I'd like to see that growing more. But again, I really have had tame expectations. VMware crushing it, continually crushing it. That 13D filing for the consideration of a spinoff is keeping the market hot. Everyone's excited about that. I mean, VMware could be a $60 to $90 billion spinoff all by itself. That's like twice Dell's market cap. So, Michael Dell's sitting on a gold mine. The company is sitting on an investor gold mine. And so there's a lot of reasons to draw investors in now and wait for what's going to happen. But the tax benefit of that particular transaction is a year away or so. So I think that's something we're going to hear a lot about, but I don't think we're going to see any action for a year. Overall, solid from Dell. I think the company's moving in the right direction. And we're coming out of the bottom, and you'll hear me talk more about that when we get to HPE.
Yeah, good analysis, Daniel. Dell was up 6% today, which was in reaction to their earnings announcement yesterday. So congratulations to Dell. So let's move into one of Dell Technologies' arch rivals here, Hewlett Packard Enterprise. They came out on the a couple days before Dell Tech on the 25th. And they beat expectations online. I'm going to hand this one over to you, Daniel.
Yeah, so HPE was really a story of resilience for me. The company had just a horrible second quarter. That was the absolute, you heard me talk about the bottom, that was the bottom. Its revenue was way down, growth was way down, the market was scared, brought the stock price into single digits. And the only sweet spot really was their GreenLake business last quarter. This quarter, based on those readjusted expectations, the company was able to beat on both revenue and earnings. Sequentially double-digit growth, which is what we were looking for, and also a showing that it's up double digits off the bottom. Company put some operational efficiencies in place, saving nearly $1 billion, just under $1 billion. And those operational efficiencies helped yield stronger bottom line numbers and got them to that $2.1 billion in profit. The free cash flow also is really important. And the reason I wouldn't even normally point these particular data points out, but when a company comes off such a rough quarter, what the market, what partners, investors, customers, they all want to know is the company in good shape? And I think Antonio Neri's comments this quarter show the company really is in good shape. It's getting business in the right places. Now, the segment revenue, the big revenues, the storage, server, compute, just like Dell, was off. It was still off. There was one area, I think, in high performance computing that the company was able to outperform just a little bit, and that was good news. But the other main categories across the board, including financial services, were all down. Now, where was the big story? Well, HPE's Discover event this year was all about software. The company is in a massive transition period. And if you're an investor, you have to take note. The company is on a transition or a transformation path away from big iron, away from big hardware, and it wants to be a services company. It wants to be your on-prem cloud. So what I'm really looking at is how well is Neri and the company executing against that strategy. And in this quarter, that was where double-digit growth came in. So I'm looking at annualized recurring revenue or run rate revenue. 528 million is the run rate right now. Like I said, you heard me talk about Dell's comparable business. Theirs is about 1.3 billion. Now they have 6 billion in services, but their recurring is about 1.3 for their the equivalent of GreenLake. So, I'm looking to see that grow faster, but 82% year over year is a solid growth. And if you think about 1 year ago is really when Neri got up at Discover, when we still traveled and went to events live and said, we're going to pivot in 3 years. That's a significant show of growth. So overall, I think, we have to be patient, watch the business model change. The company was taking a big risk before COVID. Now with COVID, the risk got even bigger, the stakes got even higher, but I think the company is really executing. It's had to make some hard choices. Cutbacks are always hard. Anytime you have to go for efficiencies, you're hoping those are short-term. But I felt a solid amount of leadership, the right partnerships, the right customer acquisitions, and growth in the right areas for HPE.
Good analysis, Daniel. The only thing I'll add on this, to me, I saw this as all about GreenLake, right? You saw an 82% increase in GreenLake, and Antonio Neri went out of his way to say this is bigger than cloud growth, which when you look at IaaS, that's correct. And I'm sure people could shoot arrows at that, but it's true. And I think they have something really good to talk about there. Two other areas, it was good to see compute, a little pop. It was only 1%, but they've been declining for many, many quarters there. And those are big numbers. Those are server numbers. And it was nice to see them turn that around. Interestingly enough, in a quarter where the first time they broke out a storage number, this is the first time, it was down 10%. But in my head, you don't break out something in your financial guidance unless you're expecting some pretty big growth. Daniel and I, you and I met the new leader of their storage business. Yeah. And it's going to be interesting to see. HPE must know something that we don't yet, and that's a good thing since we're talking about it live on air right now. But it was still pretty good. The market did give them credit. It was up 7% the day after. It's modulated a little bit down on that, but the street did give them credit for that. So let's move to our next topic. Honeywell booted off a couple other companies on the Dow Jones and moved it up there. And it's like, wait a second, Honeywell. The good news is that Daniel and I know the company very well and have been tracking it for the past couple years, kind of drilling into, in particular, two segments, their IoT segment and their quantum computing segment.
Yeah, Pat, it was really interesting. And this is probably, it's about once a quarter we have a show like this that ends up being a little heavier towards the investor. But you know what? I think the real special thing about doing this kind of analysis is you can't disconnect these. I know a lot of industry analysts don't want to talk about the financials, and a lot of financial analysts don't want to talk about the industry and the products, but these two things are symbiotic in terms of the relationship. Companies that have great products, services, and customers have really strong performing equities. So you can't disconnect these things. And I think it's important that we have these discussions with everyone out there. And hopefully you as the listeners can appreciate this. This news is just kind of rare, Pat, and it was a really strong indicator. Now, what drove this was the Apple split. With the Apple split, they had to average out the price of the Dow Jones Industrial Average, the 30, because it was going to mess everything up because they're going to split I believe it's the 4-to-1, and so they ended up booting off three companies. It was Pfizer, it was Raytheon, and Exxon. And you're talking about companies that have been on the Dow Jones in this average forever. And the replacement companies were Salesforce Amgen, and Honeywell. So we kind of got a series of modernized versions of these other companies. You went from big oil, big industrial companies to these modern biotech. Salesforce being a big SaaS software company, and Honeywell, everyone kind of looks like, and the reason I wanted to bring this up is a lot of people probably looked at Honeywell and thought, well, they're just another big old stodgy monolith. Why did Honeywell get this special treatment here? But Honeywell is sort of like a story of two companies. There's the industrial manufacturing company that's making N95 masks, which got a lot of attention this year. But then there's that other part that you mentioned, Pat. There's Honeywell Quantum, the company that is arguably building one of the most sophisticated and advanced quantum computers in the world right now. It partnering with companies like Azure, building cooperatively software interfaces with companies like Zapata Computing. And you have the HCE side, Honeywell Converge side of the business that is really your IIoT-centric business, building container-based microservice, hybrid architecture, cloud IoT solutions at the edge. They're monitoring engines on jet planes. They're monitoring entire buildings. And as we hear about edge to cloud, and Lord, you've heard a lot about edge to cloud if you're in the tech space over the last year, that edge, Honeywell is one of the companies building really important technology solutions there. So I thought it was a really important moment to say, it was good company for Honeywell to be recognized. So they're not just a company that's building masks and air filters for your air conditioner and whatever else most people think of in thermostats. They really are becoming a modernized tech company. And this was really a good, important recognition that I think will help really carry the company forward over the next several years.
Yeah, I really appreciated, Daniel, you saying a tale of two companies, because that's exactly what it is. I see Quantum, I see Honeywell Forge. I did a webinar for the announcement, one of the first announcements between SAP and Honeywell, and how Honeywell is partnering with SAP for essentially building management. And Honeywell is the piece of software and the platform that is going to go in and to be able to manage those buildings, and essentially the operating system of the building that connects, let's say, air conditioning to passive security, to active security, energy, and all those things to be able to effectively run a building like we run tech. So I think that people should really stop and maybe take a look at Honeywell as more of a tech company. It's kind of ironic. They do a lot of the electronics that go up in rockets. We see SpaceX and Blue Origin. Clearly, people look at those two companies as tech company, Amazon and SpaceX. This is what Honeywell is doing right now. But kind of their success is their challenge, right? We view them, with the administration, with COVID masks. They're making millions of these things. We kind of, put it up there, control systems for gas manufacturing plants, right? That's Honeywell. But
yeah.
Anyways, pretty exciting stuff.
You make a great point, but I think the real thing here, Pat, is this is a pivotal moment, perhaps, where the company will start to fully be recognized for what it's becoming rather than what it was. And by the way, it's been doing this a long time. I think that's your point. This isn't new. It's just really getting recognized and being brought in this moment in time. It's going to get a lot more coverage. This is going to yield a lot more CNBC airtime. This is going to yield a lot more front page Wall Street Journal. And not that the company didn't get it, but it's just a pivotal moment. It was a nice recognition that was the company picked out of everybody out there.
I'm surprised how many times Darius is on CNBC. They've got that. They kind of have that nailed. But I think he's on CNBC about once a month. Kramer likes him. There's something going on between the two of them. He's been Kramerized. So very cool. Let's jump into our next earnings here. HP Inc., the maker of personal systems and printers and ink, not to be confused with HP or HPE. Those are different companies. Listen, They were up 7% the day after. My assessment was basically HP smashes Q3 revenue, EPS, but the revenue is down, but the expectations were pretty low. Incredible PC demand, 42% increase in demand there. Notebooks up 32%. And really easy explanation. My kids, your kids, going back to school, and they need Chromebooks and they need PCs. And HP took advantage of that, which also led in part to a decline. If you're buying a lot more notebooks, you're not buying desktops. And believe it or not, a lot of businesses still buy desktops. Those were down 30%. Commercial sales were down 6%. All expected here as seasonality of kids buying, going back to school, but also the COVID blues. And finally, printers, really kind of ugly right now. The market's ugly. So although more consumers are printing on HP printers at home, that was up for them. Commercial printers were down big times, down double digits. And when you put consumer and commercial together, printing was down -20, down 20 points. Now, again, people were expecting it to be a lot worse. So hats off to HP for executing well. The big question, Daniel, that I have about the PC market is that everything that I'm hearing says that every PC that has been built in 2020 is accounted for. And we can't get enough flat panels because of that shift from desktop to notebooks. And it's hard to get the lower end processors for their Chromebooks for two reasons. First of all, AMD doesn't go after bad business anymore. And Intel isn't going to burn wafers on low-priced Chromebook processors like a Core i3 when they can be devoting that to data center or a Core i5 or a Core i7. But overall, good job, HP.
Yeah, I think you make a great point. When you can sell big, expensive servers into the cloud data center, or you can sell a $400 Acer, what are you gonna pick? But yeah, I mean, look, HP had a really solid quarter, and it just continues the run for tech. I mean, again, against an adjusted down earning, but close on a year-over-year basis, still had a very good performance. Was able to actually go out the full year, which, by the way, HPE was also able to do now. So you're starting to see these CEOs are getting a better handle on what the rest of their remaining year. It was also interesting to me, and I know this is a little more of a technicality on the financial side than the product side, Pat, but that there was some return to shareholders through repurchasing done by HP. I don't know where that sits in terms of taboo-ness, but I think that companies that are being smart with their cash that can still return I think it's great. I really do, as long as you're being smart and thinking ahead for the next difficult moment. But the companies like HP have on their own been able to sustain, return to profitability. And, Enrique Loris, the CEO, really said this, Pat, and it stuck with me on the call that we both sat on, that essentially the PC is essential. The PC is essential. We went from having the home that would share one or two PCs to now every person in every home needs a PC. That's for learning, that's for working. The mobile device, which now has already experienced that same boon of every person having one, and in our case, having six. With the PC, it's the same thing. Like, you can't share them anymore. And, I think with 5G and LTE built-in devices, these very lightweight formats that HP has many of that are very powerful and very portable are going to continue to sell. Now, the only question that sits in my mind, Pat, is how long does this momentum stay? At what point has it hit saturation? And then what are these companies going to sell when that saturation hits? But you know what? I've been asking that same question about the iPhone for the last 15 years. And so, you know what? You make the new ones powerful and workable. People spend $1,500 a year on a new iPhone. I don't know why they might not spend $800 every year or two to get a more powerful, usable, and connected PC device.
And I'm glad you brought up the dividend in particular, Daniel. Part of that to me is the hangover from the Xerox hostile takeover. HP made two commitments to the shareholders. The first one was a pretty big restructuring and cost reduction, I think to the tune of about $1 billion. There were a lot of supply chain changes that they had made. And the second thing was a commitment to dividends. So I know that Xerox was pre-COVID, but they made some commitments to shareholders and they're moving those forward. With that, let's dive into Splunk earnings. I mean, on the surface, just incredible numbers. I mean, Daniel, we talk about double-digit increases, and while their top line wasn't incredible, the numbers to me that matter, like cloud revenue, was just kind of eye-popping high.
Yeah, Pat, and that's a great point. So Splunk is sort of in the middle of that hyper growth cloud, AWS, Azure, Salesforce, and what we've been talking about on this show a lot with your big hardware-based tech companies. So essentially managing the security and managing all the assets. That's where Splunk's specializing. Splunk used to do it on a data volume basis. It used to be a much more on-prem type of offering. And last year, the company made two big commitments. So when I wrote the piece about their earnings, I didn't focus so much on the earnings across the board. What I really focused on was there was a bigger story being told here. Yeah. So you remember what I talked about with HPE and what to look for. Splunk has been the same thing. Last year, the company committed to growing its ARR, its recurring revenue, and migrating its prem-based users to the cloud. And that was the two big promises. So I wanted to know, how did the company do with those two things? In this quarter, while its overall revenues were down about 5%, again, not bad given the global circumstances, to almost $500 million. So again, this is a software company. The cloud recurring revenue, Pat, was up 89%. The overall recurring revenue is up 50%. They're now almost tracking to $2 billion a year of recurring revenue. I remember when I talked about Dell's recurring revenue, and I talked about HPE's recurring revenue. This is Splunk. Now, other than being really entertaining to say the name, a lot of people don't even know what Splunk is as an IT, observability, ops, security management. They call it data to everything. Well, basically all your data managed in the cloud now and on a recurring basis. Another thing that was really exciting for the company, Pat, that really grabbed my attention was, we love companies that have lots of customers spending a lot of money. Having a few customers that spend a lot of money is good. They were able to announce $396 million a year recurring revenue customers. Now, remember when Zoom's price shot up because they were getting customers to spend $100,000.
Right.
Splunk has 396 customers spending over $1 million. And I just noted in my piece that just this quarter, it added just universities. It was adding big school systems. It was adding government, the DHS. It was adding big enterprises like L'Oreal, Mars, media, Motley Fool. NASA signed up to use their observability tools. So the company is adding a really diverse set of big customers. I think we're going to start hearing more and more about Splunk. I mean, Splunk is one of those companies, Pat, when we first started tracking and paying attention to them, they were just kind of coming onto the radar. And in the last year, as data and observability of data and management of data and the ability to automate and put forward AI-based or ML-based IT operations, and as the popularity of that is growing, Splunk has really become arguably the leader in its space. And then again, with its security platforms as well, it also has a ton of momentum there, as we've seen security events and threat events grow exponentially during COVID, Pat. So overall, I was impressed, particularly with the fact that the company is meeting its objectives, which is this pivot to recurring revenue and cloud.
That's really good analysis, Daniel. This company really well in this space. It's impressive.
Thank you, sir.
So let's
take that compliment from you, my friend.
Buddy, I
like it.
I lathered up all the time with you, and you know it. I'm a big fan of yours. I might be your biggest fan.
Ditto, buddy. We may be each other's.
I
If
know.
you're out there listening, don't be afraid to tweet at us that you are, in fact, our biggest fan.
There we go. That would be great. Let's jump into our final topic here. And thankfully, it's not an earnings discussion. Although we like earnings, it is important earnings. And Daniel, I like earnings because I call it ground truth. Companies can lie less. In fact, you lie on the earnings call and you're either going to get sued or go to jail. Two very nasty things. So
we need a government strategy for that.
Yeah, no, I hear you.
I'm not saying sides. I'm just saying holistically.
Exactly. There was an announcement. So Cisco is the owner of the very popular WebEx that, like other services, has had astronomical growth. WebEx is known for, first of all, as a first mover, but also very high market share, viewed as very high security, because Cisco is the largest security company on the planet, which is pretty cool. And it's funny when you see the United Nations getting together, although Cisco isn't allowed to tell us that they're using WebEx, but they are, because you can tell what the UI is. And when they were doing the summer grilling on Capitol Hill with Apple and Google and Amazon, they were using WebEx as well. But anyways, I digress here. Cisco announced that it was acquiring a small startup called Babble Labs. And Babble Labs is all about adding speech enhancement by using noise removal, the car beeping, the baby crying, the dog barking, to make speech even better. And the cool part is that Cisco has said that literally wherever you use WebEx, whether it's on a smartphone, a web console, a Mac, a fancy new Desk Pro, like we communicate on, Daniel, it will work. And the other thing you might think, well, it must be cloud-based. Well, here's the thing. When you do anything in the cloud with a UC solution, it can't be encrypted on both ends, okay? Because if you do it in the cloud, you have to open it up. So what Babble is, it is a client side, meaning device side capability, which I think is pretty cool. It's very geeky. You know, you look at the background of the founders of this company, of this technology. A lot of them are in areas you would expect: analog, DSPs, and that's where a lot of folks who know how to do noise removal come from. So pretty cool. I can't wait to try it out, kind of do a before and after.
Yeah, Pat, Babble Labs was a very small, specialized company of about 33, almost all PhDs, that are essentially working on solving a problem. Now, there's kind of two schools of thought here, speaking of school, but now that all these kids are schooling at home, we basically have houses full of people all on WebEx, Zoom, Microsoft Teams meetings, right? So all these different platforms are trying to create some competitive advantages. Well, one of the biggest pains, as you and I both know, is, you're in a meeting and people have become more sympathetic or empathic to our lives as part of our meetings. But concurrently, it's an irritant. When you're trying to have a thought, you're concentrating, all of a sudden, the Amazon person is delivering your 16th package of the day and your dog is at the door. Your kids are knocking, your house phone is ringing. Your washing machine, if you live in San Francisco, your 600 square foot mansion that you paid $4 million for, your washing machine, kitchen, and office are all in the same 3-foot space. You have to have technology to optimize this. And so the ability for the technology to know the difference of Dan having a conversation and recording a podcast and my wife speaking to me in the background, or my son yelling at the television, or my dog barking at the mail person, all these things need to be discerned, and AI is the way to do that. So, and I love your point about that this is built into the hardware or into the software on-prem versus in the cloud. Because one of the biggest challenges with all these cloud offerings is security has been, an opportunistic point of entry for everything from, we've seen the Zoom bombings to hacking the data, because encryption is hard. So, every time you add these kinds of services and layers, doing them on device can create some advantages to close security loopholes. And by the way, that's something Cisco has always been very focused on, as being a security company. That's not to say that the company's been perfect at it. No company is, but Cisco's always dominated and spent a lot of effort to be a leader there. And I believe they are now the leader in security. So, this is a little move. And Cisco, by the way, I think is one of the queens of little acquisitions. Another company, by the way, that does this very well is Apple. They buy little companies that make big impacts to their products. The companies themselves basically vanish into the night. The announcement is probably the last time you ever hear about the company publicly. They integrate the technology, they deploy it to add some level of value, and it brings more value, it brings more customers, it keeps customers happier. WebEx has been very popular throughout this COVID-19, but it has its uphill climb. There's a lot of competitive products, everything from, Pat, you mentioned 8x8, I believe not too long ago in a conversation we had. And you've got Ring Central, and then you got Zoom, and you got Microsoft Teams. And these are all alternative options there. So Cisco, this is a very popular platform, but at times it's been perhaps criticized of being older, of not having the same amount of updates. Well, Cisco's invested a ton in updating it. And this is just one more example. And the company's made several acquisitions over the course of the year, has continued to improve it. And by the way, Pat, you mentioned the Desk Pro. You and I will have to come back and talk about that here, because you and I both have added these beautiful large format Desk Pros in our office that we've been playing with. And by the way, there is a big story about the appliance in video for people who are really going to be working at home, having important meetings on a day in and day out basis. That I know we love doing the video on our computers, but I got to say, I've really loved it. I've really enjoyed bringing back sort of that telepresence experience. That word has sort of vanished in the era of the Teams and Zoom, but telepresence rocks. It really does. It feels so personal, Pat. So smart move by Cisco.
Good comments, very additive. And yeah, I can't wait to do the Desk Pro first impressions here. So awesome audience. Awesome, Daniel. That's it. These are our topics. We are done. If you like what you've heard, please press that subscribe button and maybe share with your friends. Also, Daniel and I have thick skin. If you think we're full of it or think there needs to be a correction, go onto Twitter and reach out, in a respectful way, please. But we always want to make the show better. And with that, we are out of here. Daniel Newman with Futurum Research and Patrick Moorhead with Moor Insights and Strategy. Take care.